Hi there traders, this is Steve Marley, the market chartist for FX Explained, and our regular weekly macro watch update for the week commencing the 6th of December 2021. Omicron worries and faster taper talk increase risk-off pressures. Let's kick off as ever by looking at the macroeconomic and geopolitical developments over the past week. So first of all, concerns are continued to be raised that the Omicron strain of the COVID-19 coronavirus could contribute to supply chain disruptions and weigh on global economic growth. Also last week, a relatively hawkish comments from Fed Chairman Jerome Powell indicated the inflation worries are rising within the Fed and the potential to speed up the tapering of bond purchases. Omicron worries plus concerns of a more hawkish Fed have negatively impacted riskier assets, while safe haven assets have benefited. Furthermore, Friday's release of the US employment report saw the non-farm payroll element increase by 210,000 for November, significantly below the consensus estimates of 546,000. Now let's take a look at the global financial market developments of last week ending the 3rd of December. Well, equities were lower in here, riskier assets selling off on concerns of Omicron, on concerns from the Fed, and with that US employment report, US equity indices retreating, having already retreated the previous week from record highs in here, seeing a deeper retreat, setback from record levels, and European and Asian equity markets similarly lower last week. And we saw safe haven assets increase in price, so we saw lower yields, higher prices, lower yields for global bond markets, here highlighted by the plunge in yields, lower yield move on US 10 years. US dollar a little bit more indecisive. So the US dollar index in here kind of consolidating last week, having set back. Still an underlying bullish theme in here, but consolidating. And what we've really seen for the US dollar is a weaker tone in here within G3. So losing ground against the yen and the euro. We'll look at the yen shortly. But gaining against the riskier assets with the Australian dollar, New Zealand dollar and Canadian dollar significantly lower against the US dollar. So if you look here, dollar yen in here, sort of marking time last week, but having had a significant sell-off at the end of November on the back of Omicron concerns in here. So still a more negative tone for US dollar yen. So yen strength, and to a lesser extent some euro strength coming through against the dollar. But if we look at here, the Australian dollar in here, very negative week on the back of a very negative tone since the beginning of November in here. So more of a risk-off theme, and New Zealand dollar, Canadian dollars also losing ground to the US dollar. Gold in here, despite the risk-off theme in here, gold marking time really last week and overall still negative from previous sell-off seen in November. And oil having completed a top at the early part of November in here, plunging lower in late November. And despite a slight rebound last week, the market did extend lower, the oil future extending lower earlier last week in here, retaining a more bearish theme. And finally, copper in here stays negative, but still within a wider range environment. Now let's take a look at the week ahead, the week commencing the 6th of December 2021. Well, we have continued to watch for more details of the Omicron strain of COVID-19 and any developments there, and any more data that we're going to get through on how well the vaccines are dealing with the new strain. On the central bank side, we have the RBA interest decision is on Tuesday, and we get the Bank of Canada interest rate decision statement and press conference on Wednesday. And looking at the data for Monday, nothing of real note in here. We get that RBA interest rate decision on Tuesday alongside EU GDP and the German ZEW survey. Wednesday brings Japanese GDP and the Bank of Canada interest rate decision. Thursday we get Chinese CPI, and then Friday we get UK GDP, industrial production and manufacturing production, German CPI and US CPI. I'm going to wish you all a great trading week. As ever, please do hit the like button if you like what you're seeing in here, and also don't forget to follow us on our YouTube channel. Stay safe, and I'll be back with you with another macro watch next week. So traders, don't forget to catch us on the next FX Explained macro watch and all the great content on fxexplained.co.uk.